Good morning, everybody. It's Chris here from Serene Education with the 4 majors analyst update for the 19th of April 2013. Morning, guys. Hope you had a good day yesterday. Saw very little momentum yesterday due to the fact that we had G20 meetings all day, and we have the same thing yet again today. So more of a long weekend, a lot of meetings, the G20 summits taking place, and yeah, not really seeing a hell of a lot of movement yesterday after a very bullish candle followed by a very bearish candle. Tweeds at top, potentially. I'll put that in inverted commas, potentially tweeds at top. If it is a tweeds at top, those always happen at the top of a trend. We have a small minor trend here, and we need to now see a confirmation candle, i.e. a bearish candle close. You can see where on the daily here on my euro against US dollar, that price is sitting on a the 200 period moving average, the institution moving average. So one of concern. Because if we have this up candle followed by a bearish engulfing, it's taken away all that buying sentiment initially, but we do need to see a confirmation candle, and there would have to be a bearish engulfing candle just to confirm the sentiment is genuinely moving. In this case, one of bearishness, and is genuinely moving in the direction. Otherwise, the only thing that's going to cancel this bearish scenario here is a bullish engulfing candle. And you can see yesterday's candle not really giving us a signal. In fact, not breaking the prior low, daily low. So finding support, and if it does continue to do so, then we're likely to see a bullish engulfing, which is the only thing that will cancel out this negative sentiment candle or candles setup that we saw just recently here. So we do need to see price breaking and closing lower than this area here as soon as possible. So on our intraday, you can quite clearly see that on our euro, we're starting to see a lot more blue. Okay, especially on our intraday, we're seeing a lot of buying sentiment coming through, and as long as this maintains to be positive, i.e. buying sentiment, then we're likely to see those candles growing larger during the course of this morning, going into the US session this afternoon. You can see the daily is all still buying up. There's still a buying scenario. However, on our 4-hour, we're seeing a bit of negativity on those candles. So intraday, we want to see price trading above the 4-hour swing. You can quite clearly see here there is a little prior high, intraday high yesterday, not getting above that, but not trading any lower than the current low. So notice straight away our RMO is still above the zero line. Yes, as it has been moving to the upside here quite clearly, you can see that the RMO has got slightly lower. So the sentiment just waning as we move higher, but as long as it maintains above zero, there's still buying opportunities. Our MACD is moving back towards the zero line. So a lot of positive selling. We saw this massive move to the downside, but because it didn't break below the prior support area here on our 4-hour, price is now bounced, and we're seeing the MACD consolidating back to the zero line. So as it stands at the moment now, we want to see price trading above the 1310 mark intraday to see further buying opportunities, and that would take us back to the current high that we've seen recently, and these highs here roughly just around the 13170 mark. So intraday, there's still buying sentiment coming through on the smaller time frames, which is going to obviously factor through. That's going to push price higher. If we can get above this 1310, then we're looking for price to continue to the upside for the foreseeable future. I've just drawn a quick fib retracement from the current lows we've seen here through April to the current highs that we saw just recently on the 16th, I think it was, and you can quite clearly see that price has traded or pulled back beyond the 23.6. So hence the reason yesterday we saw resistance. We saw resistance at the 23.6. So it's imperative that we see price trading above the 23.6 fib retracement area here, which would be ideally above that 1310. If we don't see price getting above that anytime soon, there's more likely for price now to find resistance, and then price is going to look for that bearish sentiment to come through. As I mentioned to you, remember, on the daily we had a very bull candle up and then followed by a very bearish candle down. So we call that a tweezer top. It happens after an uptrend. You can see price has been trending up. However, we do need to see a confirmation candle or bearish confirmation break lower. If we don't see that, as I mentioned, then we could see a candle. The only candle that could actually cancel this negative sentiment candle at the top here is a bullish engulfing. But the longer it finds resistance here near term, the more likely it's going to push price lower, the more likely we're going to see that bearish engulfing candle coming up soon. So be aware of that. Be very, very, everything's looking positive, but we're still trading into the underside of that is that fib retracement, 23.6. We do need to get above it. If we don't, this bull sentiment that we're seeing intraday will work out to be nothing. onto sterling. Let's have a look at sterling. Price yesterday also, G20 summit meetings, prices just pretty much just fizzled out. What we have seen on here on price for sterling is obviously the fact that we've been seeing selling sentiments since, I think it was January. Yeah, the start of January, 31st of December. In fact, we saw price really falling to the downside against US dollar. However, near term, we've seen a consolidation taking place at the 1485, primarily because the 15300 had been broken, which constitutes to a major support and resistance level going back months. We saw a break and we headed down to a next support and resistance level that was in the shape of the 148,500, which was the consolidation effect after the break on 15,300 back in 2010, guys. So once it got there, pulled back. Now you can see prices pretty much going back onto forwards. It's trading above 15,300, then trading below 15,300, above 15, but at the same time, what it's doing though is it's forming lower swings. Okay, the negativity is still there. However, if you look at the long-term sentiment of this particular pair, it's one of negativity. However, intraday or on our smaller time frames, you can see one of positiveness, a lot more buying sentiment. So if that continues, then we should see price now building on the support that price is trading right now. You can see it's trading right at the 15,300 mark. Notice our RMO, guys. It's still, even though price is making, it's actually trading neither here nor there on the other side. It's very indecisive because it's trading in this box pattern. You can see that we've made higher highs. Okay, when we swing high, we're making higher highs. Very, very important. Swing high, swing high, swing high. As long as it maintains swing highs, then we're looking for positive sentiment. Our MACD has waned though. As price moved higher, MACD has started to drop. Okay, so we're seeing this divergence. Okay, as price is hitting higher, MACD is falling. And you can see near term here as we head into this, or as we trade, we're seeing the MACD below and the RMO is still below. So what we could be seeing here ideally is a consolidation, because we're trading into this 15,300 mark, major support and resistance. But the more likely we could see price waning now. But it's still showing buying sentiment. Okay, the long-term sentiment is negative. We have fallen. However, near term we've seen a consolidation. That consolidation is taking place at the 15,300. The fact that we're trading below the 15,300 is giving us one of, in brackets, early warning signals, because the fact that if back here in February saw the selling into this major support and resistance level, on every single occasion price has moved into this level over the years, it's always bounced. This time around it went straight through it, pulled back, and then continued in the direction of the breakout, which was a negative sentiment, because for the first time since 2010 we've seen euro really looking very negative. Okay, so the fact that she's pulled back here, this could constitute to profit taking, breakout, pullback, and the more she consolidates now at this level at 15,300 without breaking and pushing higher very shortly, the more it's more likelihood of it looking more negative. Okay, so RMO still long term, my daily still looking negative because of the fact that we're trading below the zero line. It has moved back. It's not making lower swings, which depicts downside, but it's still trading below the zero line. So one hesitation. The fact that we're still trading above this area here, or around this area here at the 15,300, gives me warning signals. So the longer it spends over here, the more likely there's going to see indecision. So I'm going to not trade. I haven't traded the sterling against US dollar this whole week because of the fact that we're not moving away from this 15,300. I should be looking for bearish sentiment because we're trading at the underside of it. The longer it trades under 15,300, the more likely the sentiment is going to start looking negative. At the moment now, you can start seeing things are starting just to show grassroots levels for negativity. But I want to see a bearish engulfing candle to confirm that this area here at 15,300 is a major resistance level. Okay, very, very important. Because at the moment, everything intraday is telling me I should be looking for buying. The only thing that I don't have in my favor, which could be the deciding factor here, is besides the 5-minute and the 30-minute, which is giving us true buying sentiment, the other ones are buying, but the R squared is red, which tells us that that sentiment on those time frames isn't genuine. Very, very important. R squared plots genuine sentiment, buying sentiment, selling sentiment. If the sentiment is up, which you can see on the 4 hour and 50 minutes, but the actual R squared is negative, it's telling us that that sentiment on those time frames is not generally moving in the direction, in this case, up, because it's all blue. So that could be the deciding factor. We could see potentially a bearish engulfing candle here. Look at the news today, see if there's anything out there that could factor in. Nothing comes to mind. The fact that we're still having G20 meetings is going to obviously maintain a one of, we've got to be very, you can see a lot of speculation because of that. So intraday, you can see you're making lower swings. Here is that major support and resistance level. In fact, if you can make it as thick as possible, change the color so you know exactly what level. That over there is that's a major hurdle for price at the moment. The more she spends below that, the more likely price is likely to weigh into the downside. The more she spends above it, which we've seen just recently, she's spending more time above it. She should be making an attempt to go higher, but in this case, you can quite clearly see she's not. She's still making lower lows. So the sentiment is still one of negativity because of the fact she's not really, once you got above here, she didn't really progress any higher as soon as possible. The breakout, the pullback, the continuation didn't come. The continuation. So the sentiment is not generally there. And if that's the case, then we should still be looking for that negative sentiment to come through. So a lot of positive sentiment intraday, however, not really with. There's a lot of positive movements. Let me just word that correctly, but the sentiment's not really with it at the moment. Okay, so be very, very careful. In order for this to be genuine positive sentiment, got to see a break above our intraday highs or price swing high, which would be this one over here, roughly around the. If I could just draw a straight line, it'd be fantastic. We're looking at roughly the 15. What would that be? It's obviously I can get this line over here. We're looking at the 1537.20 mark, or if you want to see negativity, then we need to see these current lows over here at the 15246 mark being breached, and then we'll look back towards our institution moving average as our first target intraday, and then all the way down to the prior one. On to the US dollar Swiss franc. Here also very interesting. Price has bottomed out at the top here, failing to make any higher highs through March and into April, and subsequently price has been falling. Broke below the price support and resistance level here. You see the consolidation area here. We're moving higher, then consolidating higher, consolidating higher, consolidate. So breaking out this box pattern, pull back, and then continuing lower. And in doing so, trading below the institution moving average again, which is a negative sign. I look at my indicator chart over here, you can see there's a lot more negative on this particular pair than there is blue. And that's true because over a long period of time, price recently has been making higher highs. Okay, but the overall sentiment is one of negativity because of the fact that we're still moving lower. You can see our prior high is lower. See the new high here is still lower than the prior high, so we're still in a negative trend. Moving sideways, we haven't moved consolidatively over a long period of time. Not really moving in any one true direction, but the fact that we haven't failed to make any new highs has told us we're looking at potentially a new swing low, and in doing so we can target the prior low. So here roughly around the 9064 mark we have a current low which we target now. So we look at all our indicators. You can see the RMO is below the 0 line. Most importantly, we have a red arrow, candles are red. We're trading below all the moving averages now on our daily. So that's one of negativity. If we look at our daily, everything's fantastic because as I mentioned to you, if we're seeing selling, happy days. The only thing that doesn't need to be in our favor if we see true selling or true buying is the fact that the R squared needs to be blue. Because if the R squared is blue, it's telling us it's genuine. Genuine selling. Because on the daily it's sell, 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 and it's blue on the R square, which is telling us we are looking for genuine sentiment in the direction of the trend. Okay, fantastic. You can see that on the 1 hour we have genuine buying. You can see quite clearly we are buying into the institution moving average. Not a good sign. You don't want to be buying something if there's a major resistance level. You can quite clearly see, if I just zoom in here, we've had 1, 2, 3, 4, 5, 6, 7 consecutive days where prices failed to break above the institution moving average. Not really good sign that. And you can look at our intraday. We're also seeing selling, sell, 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 all genuine selling. It's just that the moving averages on these particular time frames, i.e. 15, 30 minute and hourly, the moving average, or the institution, because it's plotting the institution moving average, is below price. So we could use the institution moving average as either a target, or if it's trading into it right now, we need to see a break of that institution moving average before we see any further selling opportunities in today. Because at the moment now, the longer it finds resistance here, the more likely prices to win. Here again, though, we've had a potential tweezer bottom. See prices fall in. We've had a very negative candle followed by a very positive candle. And we call this a tweezer bottom. As same on the US dollar, we had a similar scenario, which was a tweezer top. This is a tweezer bottom. The only thing that's going to, what we do need to see is a confirmation candle. So if you see a tweezer bottom, you want to see a bullish engulfing candle to confirm that's genuinely the sentiment. The only thing that's going to cancel this is a bearish engulfing candle close. And the longer, like a European counterpart, the longer it finds resistance or support, in this case resistance, the more likely we're going to start seeing negativity playing out. So it's imperative that this is to be a genuine tweezer bottom. We need to see price trading or breaking high as soon as possible, ideally above this current support and resistance level here in the shape of the institution, but also this one over here at 938 and 940 mark in particular, to see any further attempts at these prior highs here. So at the moment now, more negativity on the actual indicator, so should be looking for that negativity to play through intraday. Last but not least, the US dollar Japanese yen. This one, 1, 2, 3, 4, 5 red candles. So what does it tell you straight away? Let's all sell. Don't think so. This is the beauty of it. You can see the long-term sentiment on the US dollar Japanese yen has been one of positiveness. On the daily, we have one or two indicators here that don't plot up, i.e. the MACD. You can see the MACD is still below the zero line. Parabolic SAR, which we actually use primarily for stop placements and stuff like that, is showing one of negativity. It's primarily because the MACD is moving away. And our R squared. So we have buying sentiment, okay, but it's not genuine buying sentiment. And the deciding factor straight away is the fact that we have a red arrow. You don't really going to be buying when you have a red arrow. Okay. The fact that the R squared is moving lower is telling us that sentiment is waning. And intraday, however, we have everything is blue. So intraday is starting to buy, but as it stands now, you'll be looking for opportunities into the current fib retracement high here in the shape of the 100, because that is a major support and resistance level. Fib retracement as well. You can see the 50% line also complements that major support and resistance level high. So as long as this resistance here, then we should be targeting intraday. We should be targeting these areas here at the top. Okay, very, very important. So as it stands at the moment now, we should be looking for buying opportunities into the 100, nothing else. Okay, the only time when you start looking for something to sell is when we see price definitely trading below this price support and resistance level here in the shape of the 96.68 mark. Okay, guys, that's it for today. That's it for this week. Hope you have a fantastic trading day today. Please be aware of any major news announcements today. We've got the G20 meetings all day today, guys. We had them yesterday and all day today. Yesterday we didn't really see much movement. We could see very little movement today because of the fact that we are going into a Friday. A lot of consolidation will potentially take place because of the fact that we are end of week trading. Other than that, we have current account numbers this morning for Euro. We've got Canadian figures this afternoon at 1:30, wholesale month-on-month figures, core CPI month-on-month figures for Canada. However, the big one is the fact that we have the IMF meetings all day. We have the G20 meetings all day. So there's a lot of meetings today which would potentially lead into a lot of consolidation or speculation. And going into a weekend, you find a lot of people are starting to consolidate their positions. Okay, so look for very little momentum, but because we have the IMF meeting as well, G20, we could find something. Could something come out of those meetings to move the market before the end of close today? There's always a chance of it, so be aware of it. Other than that, have a fantastic weekend, and I'll see you first thing on Monday morning. Until then, you guys trade serenely.